For Apple, I mean, these developer conferences, the WWDCs, all of these things provide that showcase, and they generate buzz. But they typically, Daniel, and you know this as well as I do, they don't typically generate massive stock price movements here. So what exactly should Wall Street be focusing on when it comes to Apple?
Good morning, Dominic. Wall Street should focus on this push forward of the user experience and really empowering the developers around the world to build new applications. So, for example, I think augmented and virtual reality will get even more of a focus at this current developer conference. And over time, we are likely to see devices from Apple. It's important that the developers help Apple create this experience because obviously devices will need there needs to be things for people to do. Additionally, I would expect a continued focus on healthcare and fitness, as well as this emphasis on the user privacy and wrapped in a fun experience across all the devices and services.
So it's interesting because when it comes to these mega cap technology/communication services companies putting out hardware devices, not many of them can do so outside their core expertise with any success. I think of the Google Glass devices, right? The glasses. I think of the Portal devices from Facebook. Now, they may be selling, but they maybe weren't as prevalent. I don't see them out there as many places as I think. And Oculus, the virtual reality headsets, I do see them in stores. I do see people actually using them sometimes, but it hasn't become mainstream. So what exactly is Apple looking to do with this kind of augmented reality device, possibly, that could be coming out today?
I think it's going to be a continuation of this idea of integrating the hardware, the software, and the services. The build out of these platforms is really about capturing a lot of different elements. It's not just the hardware. It's not just the software. If you're able to pull them together in a way that the user finds to be differentiated, fun, valuable to their lives, if you're able to do that, that, in my view, are the keys for success. And if you look back, even going back a couple of decades with the iPod, then, of course, the iPhone, the iPad, the watch, this idea of pulling that together, and I think we'll see that over the coming several years with augmented virtual reality, is pulling these different pieces together in a differentiated way.
And Daniel, one of your peers, Katie Huberty over at Morgan Stanley, who also covers Apple, last week issued a note reiterating an outperform or a buy rating, but also saying that there are some concerns about services revenue, specifically with regard to the App Store. Do you share some of those concerns about whether or not that services kind of side of the business at Apple is due for a bit of a slowdown? And how exactly should investors treat that services business compared to the core, say, iPhone business over there for hardware?
I think if we step back, I think the services business has been incredibly valuable to Apple and, of course, its customers and broader ecosystem. Given just how strong it's been during the pandemic, it is not surprising to us to see slowing growth, as well as in the hardware business. When we look out, though, and think about the next 1 to 2 years, we expect new devices, we expect new services. We've seen them innovate in services like with things like Fitness Plus. And so we see a re-acceleration in services and device growth over the next year. But we continue to like the name. We continue to think about it in terms of the product cycles. And of course, services is a very important and powerful driver to the overall story.